All right, we're going to be going over, for the 7th video, a breaker structure, which is going to be pretty simple. We're going to try our best to explain it as simplest as possible, if that's a word, simplest, maybe, I don't know. But we're going to be going over a breaker structure on this video, and yeah, what I'm trying to do with these videos, again, I'm trying to just teach you everything first before we put all the puzzle pieces together. So when I explain breaker structure, that doesn't mean you just enter trades off of a breaker structure. Again, you have to put the puzzle pieces together, like a breaker structure with a liquidity sweep, fair value gaps, order blocks, breaker blocks, equilibrium. There's a bunch of stuff you guys got to put together, and we'll get over the strategy once we keep going with these videos. But again, that's going to be when we're around like the 20th video or something like that. But other than that, we're going to go over breaker structure first, and then, yeah, we'll see where this video takes us. Sorry for the dog barking in the background, but let's go. Okay, so we're going to go over this breaker structure video just like how we did with the other one. We're going to go over, again, I'll draw it for you. We'll go over the definition of what a breaker structure is, and then we'll go into the live examples in the chart. But other than that, we already went over highs and lows. Already went over what trends happen in the market, like an uptrend, a downtrend, and also consolidation. That'll be important for this video. But again, if you don't know what a high and a low is yet, go back and watch that video because it'll be a little bit difficult for you to learn what a breaker structure is. And again, we want this to be as simple as possible for you guys. So first, we're going to go over the definition of a breaker structure. And again, this is the way I was taught, this is the way I learned, and this is the way I do it in the market. It works for me. If you don't want to do it, you don't have to do it. I say in every one of my videos, some people make this so complicated when it doesn't have to be. I use breaker structure all the time, every day in the market. You can use it on every single time frame. But again, you're not just going to enter off of a breaker structure. You have to put more of the puzzle pieces together, like a breaker structure, liquidity sweep, order blocks, fair value gaps, equilibrium, Fibonacci. There's a bunch of stuff you guys could put together to get a strategy. But again, we're just trying to teach breaker structure right now so you guys can learn and identify it in the markets so it can help you take a step forward towards maybe becoming profitable in the future. All right, so what is the definition of a breaker structure? So a breaker structure is when there's a trend shift showing that orders may be filled or push price in the opposite direction. So let's X this out here real quick. Can we X out this whole thing? Bang. So last video, we learned that the market moves in 3 different ways: uptrend, downtrend, consolidation. Correct? Cool. So with an uptrend, we'll make this green. Here's my artwork right there for you guys. Bang, we'll make this green. Uptrend. So in an uptrend, we move in higher highs and higher lows, right? So we have a higher high, higher low, higher high, higher low, higher high, higher low, blah, 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 continue on, right? So if we wanted a breaker structure, what would we want to see for the market to move in the opposite direction? We would want to see the most recent low, if we're in an uptrend, to get broken, because you break structure. So we want to see a candle close before the previous low, right? So let's say, right, our next candle comes down here and we break past the previous low. Literally in the definition, break a structure. This would be our breaker structure with the candle close, and I'll go over the candle close later in this video. But this would indicate that orders are being filled and that the market might continue in a downtrend now. But that's why we just don't enter off of a breaker structure. We'd wait for price to come back, retest an area, and then we'd continue down. And then we would move in lower lows and lower highs, right? Because a downtrend moves in lower lows and lower highs. And here, we'll actually go off of this. So look, let's see. X that out, we'll X this out. Then we'll start drawing our little downtrend here. So this is our breaker structure right here. And then we start moving in a downtrend, right? Form lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So what would we need for us to break structure to the upside? We would need to break past, have a candle closure above the most recent high. So we would want price to come up here and close past this most recent high. Because again, in an uptrend, let's go back to the uptrend. In an uptrend, we're moving in higher highs and higher lows, right? Higher highs and higher lows. If this candle, if the market comes down and we close below the most recent low, that would be considered a lower low. So what does a downtrend consist of? lower lows, and lower highs. Correct? So now we're forming, let's see, we form a lower low, then we form a lower high. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Market wants to break structure to the upside. We close above the most recent high, as you can see right here, right? We close above it. Now we're going to form a higher high. And an uptrend consists of higher highs and higher lows. So we would assume that the market is going to start forming a higher low, then a higher high, then a higher low, then a higher high, then a higher low, then a higher high. Boom. Literally that simple. Let's make this green. Right? So we'll go over the example again. We are in an uptrend, correct? So we're forming higher highs, higher lows. Higher high, higher low, higher high, higher low, higher high, higher low. How you doing? Higher high. Right? Then we break structure to the downside by closing past the most recent low, which forms a what? If it's not higher than the previous low, we're not in an uptrend anymore. We formed a lower low because it's lower than the previous low. Literally that simple. Like we were lower than the previous low. Bang. We break structure to the downside. Now we're showing lower lows, higher low. Lower high. Lower low, lower high, lower low, lower high, lower low, lower high. What would we need to break structure to the upside? We would need the most recent high to get broken above, closed above, right? Look, we close above right here. Bang. Look at that. Now we form a higher high because it's higher than the last high. So that shows that we're starting to go in an uptrend. We'd assume that the market's going to make a higher low, and then a higher high, higher low, higher low, higher high, blah, blah, blah. Bang, bing, bomb, boom. Continue up. Good? Awesome. That should be pretty simple right there. Breaker structure is pretty simple. Some people on social media make it so hard, and they do all these calculations and shit and stuff like that, but this is pretty simple. It's a dumbed down version. It works good for me. Break a structure, change state delivery, whatever the hell you want to do. I don't know. I just go with break a structure. It works for me. And then, yeah, it goes off that. So let's go into the chart. Sorry if you hear the dog in the background. She's a little bit crazy. Let's go into the live chart of what a break a structure would look like on candlesticks. Because, again, I want to draw it out for you first to make it a little bit more simpler. And now we're going to go into the chart. So we literally have a perfect example right here. So let's say, we'll do this black line again. So let's say, look, we'll go from this black line right here. So from this black line on, right, we are forming, so we have a low, and then we have a lower high. So then we form a lower low and a lower high, and you go back and watch this video where we already did this. This is in the previous video before we identify these. So I'm going to speed it up a little bit during this, because again, in the last video, you should already learn what market trends are and identifying highs and lows, right? Then we form a lower low, then we form a lower high. But what happens after on this candle, right here? This candle closure, we break structure to the upside because we form a higher high, but this high would be all the way up here, because again, a high has to consist of a bullish candle, then a bearish candle. Right? So the high would be marked up here. That would be our higher high. Then it would be considered an uptrend. Right? But our break of structure would be on this candle closure. Again, did we break structure? This is something else you're going to learn right here too, because this is a perfect example. Did we break structure with this wick? No. If we wick above the last high, we did not break structure to the upside. All right, it has to be a candle closure. So the candle's body has to close above the most recent high. Right? Good. Can we remember that? So it has to be a candle closure. This first candle is not a break of structure yet. Once this candle closed, then it's a break of structure to the upside. We start forming in an uptrend. Look, but it continued up. So if we went past here and we want to see a break of structure to the downside, we're going to monitor the lows. So again, if we want to see a break of structure to the upside, if we're in a downtrend, we're going to monitor the highs. If we want to see a break of structure to the downside, we want to monitor the lows. And this is what we're going to do here. Right? Here's another little example. Look, when we want to see a break of structure to the downside, we're going to monitor each low. So we have a bearish candle, then a bullish candle. Boom. Did we break structure on this candle? No, because we wicked underneath it. We didn't have a body close. But then look, we form a new low, right? We're not going to keep this low marked out. Every time we form a new low or a new high, we didn't break structure yet, you monitor that next one. You don't monitor the one that's already passed, right? If we form a new low or a new high and we didn't break structure yet, we monitor that new low or that new high every single time. So look, we form a bearish candle and a bullish candle. Our new low is going to be this candle's wick. Did we break structure on this candle since we went underneath it? If you said yes, maybe more retarded than me. I'm just kidding. No, I don't know. Don't take offense to that. I'm just fucking around. But no, we didn't break structure to the downside yet because it has to be a candle closure. Correct? Good. Look, did we break structure on this candle? No. Did we break structure on this candle? No. This candle? No. But this candle we did. Right? Because we didn't form a new low yet, so we're still monitoring this low. Then we break structure to the downside. Boom! Now we're technically in a downtrend. We'll actually keep that here real quick. We closed underneath this last low, so now we're technically in a downtrend. So what do? We form a lower low, lower high, lower low, lower high, lower low, lower high, lower low, blah, 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 blah. Continue to the downside. Cool? Let's go over an uptrend. Again, this works on every time frame too. You're not just going to enter off of a break of structure though. You can see this on the 1 hour, the 5 minute, the 1 minute, whatever you're going to do. But again, we're going to put the puzzle pieces together as we get later in these videos. I just want you to identify what a break of structure is right now. Go back and back test it and learn what a break of structure is with the market trends. And then we'll keep going from there. Then we'll put break of structure with the liquidity sweep, with the fair value gap, with the retest, with the inverse. We'll do all that in this future, I promise. But right now, let's just focus on understanding what a break of structure is. Is that okay? All right. I think that's okay. All right. Let's look for a uptrend. So let's go to the 1 hour time frame. Let's see when we break to an uptrend. What's a good example? I don't like how we had a gap on that one. All right, look. Let's go past this candle right here. You guys should be able to see that, right? This black line. You guys can see that black line. All right, perfect. So look, we break structure to the downside. Ready? Look. We break structure to the downside. Low. I mean, we have a bearish candle and a bullish candle. We break structure to the downside on what candle here? Oh, shit. What did we do there? Hold on. My arm hit the space bar. All right, look. When do we break structure? I'm going to give you 2 seconds. Is it this candle? No. Is it this candle? No. Did we form a new low yet here? No. So we're still monitoring this. We break structure on this candle closure right here. On this candle closure, we just barely closed at the top of it. We didn't break under it. We wicked under it, but we came back up. We didn't break structure yet. I wouldn't consider that a break of structure. We break structure on this candle. So now we are in a downtrend. And another thing I want to teach you too is if we already break structure to the downside, guys, there's no need to monitor another break of structure to the downside because we are literally in a downtrend, correct? If you see another low that gets broken underneath, like, let's say, I know we're on that example real quick. So let's say we break structure to the downside right here. We're in an uptrend. We break structure to the downside on this candle, right? We are already in a downtrend. There's no need to monitor the lows anymore. If you say you come down to this low and we broke structure again, just no, okay? We're already in a downtrend. If you want to break a structure to the upside, you're going to monitor the what? The highs. So look, we have a bullish candle and a bearish candle. This is what we're going to monitor if we want to see a break structure to the upside. We form a new high down here. We monitor this high right here. We form a new high right here because we didn't break structure yet. Form a new high. Wait, we didn't break structure on this candle yet. We're still in a downtrend. We form a new high. There's our new high. We monitor it. Didn't break structure to the upside yet. We monitor this new high that was formed right here. Bullish candle, bearish candle. Bang! Then we break structure to the upside. Cool. All right. Go back to our example. Look. So look. We broke structure to the downside on this candle here. Now we are in a downtrend. If we want to look for a break of structure to the upside, we monitor the highs. We don't break structure again to the downside because we were already in a what? Fucking downtrend. Simple. Simple. We can't break structure twice. We can't break structure 3 times. We could break structure to the opposite direction. We could break structure to the downside, then to the upside, then to the downside, then to the upside. But that's literally going to be consolidation. We want to look for a breakout in that situation. Like if we're in consolidation like this, let's say, look, if we're in consolidation like this, and we broke structure to the upside, broke structure to the downside, broke structure to the upside, broke structure to the downside, didn't break structure to the upside, what we would be looking for on this occasion is, again, we probably monitor up here and up here. We'd want to see a clear break like this, and then a retest, and then continue up. Correct? Or to the downside, you want to see a clear break to like here, and then a retest. If you're in consolidation, you want to be really patient. You don't want to trade when you're in consolidation unless you're like a scalper or some shit. But again, we're not scalping. We're trying to get big moves and try and get a little piece of the pie when the banks are in, like when the banks are involved in the market, moving the market in a certain direction. We want to chase where the big money's going, and then take a little chunk out of the pie. Got it? Cool. We'll get into that more later also. Not getting ahead of ourselves. That's when you guys are going to learn liquidity sweeps and stuff like that. But right now, we're staying on break structure. Break structure right here. Cool. All right, so look. We are now in a downtrend in the example before, right? Because we broke structure down on this candle. This candle, we didn't break structure underneath yet. It has to be the candle closure. I'll say that 10 times. We break structure on this candle. Now we are in a downtrend. So what are we going to monitor for us to go into an uptrend? The highs, right? If we get a higher high, we break structure because the downtrend moves in lower highs. If we get a higher high and we close above it, that most recent high, that means we're most likely going to continue in a what? Uptrend. Bing bong. Bing boom. All right. So look, we monitor our highs. Our most recent high, we come down here, bullish candle and a bearish candle. You should already know this because you watched my last video or 2 videos ago or something like that. You know. I made a candlestick video of highs and lows. So you should know what a high and low is by now. So what do? We monitor our highs and our lows. Look, did we break structure on this candle? No. Did we break structure on this candle? No. But what did we form? A bullish candle, then a bearish candle. So we're going to come down and we're going to monitor this high. Isn't that cool? Look at that. And then what do we get? Do we get a break structure on this candle? Hell no. But what about this candle? Close above the most recent high. So we form a higher high here. We were in a downtrend forming lower highs. Now we broke above the most recent high. And oh my God, look, we made a higher high. So we're going up. Right? So now, one more example. Look, if we want to go to a downtrend now, if we're looking for price to break structure to the downside, what are we going to monitor? We're going to monitor the lows because we can't break structure 2 times or 3 times or 4 times to the upside in a row. We're already in an uptrend, so we're continuing up. So now we're going to monitor the lows. Ready? Look at this. Look at it. We form a low here. Did we break structure to the downside? No. We form a low here. Did we break structure to the downside? No. Don't worry about this candle yet. We're not there yet. Pretend that candle's not here. We're going from each candle right now like we're in the live market. Go to this candle right here. This should be our low. Right there. Bearish candle, bullish candle. Did we break structure to the downside on this candle if we wicked below it? No. Wait for candle closure. If this is on the 1 hour time frame and we still have 55 minutes and 53 seconds left and the candle's under here, that doesn't mean we broke structure yet. We still have 55 minutes for the candle to close, and look, it closed all the way up here. We're still in an uptrend. Whew, I lost my breath on that one. I gotta stop smoking cigars. I'm just kidding. No, I don't. All right. Monitoring the lows to continue in a downtrend. So look, when do we form our most recent low? We're still continuing up. When do we form our most recent low? Nope. We break structure on this candle right here. When we formed that low almost. So we break structure to the downside on this candle right here because we monitored this whole one. We didn't form any new low yet. We break structure to the downside. So look, now we might be in a downtrend. But again, this is at 6 p.m. This is Asian session open, right? We're waiting. I'm not taking a trade here yet. But look, now we're going to monitor our highs So when do we form a new high? This is our most recent high, right? If we want to break structure to the upside again. No, but we formed a new high here. Look. We formed a new high here. Did we break structure to the upside yet? No. Did we break structure to the upside yet? We formed a new high here. Bullish candle and a bearish candle. No, we didn't break structure to the upside yet on this candle. It closed below it. When do we break structure to the upside? Bang. Right here. Look at that. I'll draw it out for you. Candle close. There's our definition again on accident. Candle closure above it. That's simple, guys. Right? So let's write it down. Let's write it down real quick before we end this video. What are we at? 22 minutes? Wow, time goes fast when you teach. We're in the 1 hour time frame. Let's screw all this stuff. All right, remove drawings. Let's go to the typing thing. So look. Break structure. We'll type it out for you guys literally. So, if we want a break of structure, if we're in a downtrend, what do we want to do? If we are in a downtrend, we'll just continue on. We want price to close, above the most recent high to show us that we might, how do I press enter? In a uptrend. Is that one word? I don't know. Who cares? I know how to trade. I'm not good at spelling. I have dyslexia, so you can deal with me. All right. There we go. So break a structure. If we are in a downtrend, we want price to close. Let's do this here. Close. Not wick. Close. Above the most recent high to show us that we might continue in an uptrend. Again, that's what other stuff's going to continue in when we do fair value gap, blah, blah, blah. You don't enter off of just a break of structure. Please, don't. Thank you. Cool. All right. So now we'll do another one. So this will be a break of structure to the upside. Bang. All right, now let's do a break of structure to the downside. All right, break structure to the downside. If we are in an uptrend, right? We're forming higher highs and higher lows, right? We want price to close below the most recent low, because we'd form a lower low showing us that we may continue in a downtrend. Correct? Boom. Recent low to show us we might continue. Holy shit. In a downtrend. Ding, 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 ding. Cool. Look at that. All right, here's all the things you're going to put in your notes. Look. All right. Break structure to the downside. If we are in an uptrend, we want price to close below the most recent low to show us that we may continue in a downtrend. Cool. Let's add one more or two more things to that. A break of structure is not a, well, no, we'll do this. A break of structure is not valid if we don't close below, below, Jesus, below the, we'll do below slash above or above the most recent low slash high. You guys should know what that means. So put that in your notes. A break of structure is not valid if we don't close below or above the most recent high or low. You should know if we're in an uptrend or a downtrend. You know what I mean with that, okay? We can read that one too. What's another thing? Candle close. We already went over the close. It is not a break of structure if we wick. How do you spell wick? Is it W-I-C-K? Is it W-I-C-K? I'm a little retarded. Just bear with me. Let's ask Siri. How do you spell wick? This will be clipped. W-I-C-K. Whatever. It is not a break of structure if we wick below slash or above the most recent, oh my god, this dog, low slash high. Bang. And then last thing, I just had it in my brain and now I'm forgetting. See, I told you, you guys, I might not be the smartest guy in the world, but again, I could trade. Break structure value, no, recent high. It is not a break structure. Oh, okay, yeah. Last thing, I promise. Make sure to. Holy shit, I'm not gonna be able to spell this word. I'm gonna be honest with you. I think I spelled it right. Monitor the most recent. Holy shit. Low slash high when looking for a break of structure. Okay? That should be your last note right there. Look, one, put that right there. We'll make these all even for you guys so you guys can write these down, screenshot them, whatever you want to do. I don't care. This is information. Bang, right there. Make sure to monitor the most recent low slash highs when looking for a break of structure. Again, I showed in the example, it has to be the most recent lower high. So if we are in a downtrend, we want to monitor the most recent highs for it to be break of structure to the upside. Correct? If we form a new high and we haven't broke structure to the upside, we monitor that new high. If we are in a uptrend and then we want to look for a break of structure to the downside, we're going to monitor those lows, the most recent low. So if we form a new low, so we form a low and then we form another low. If we didn't break structure yet on that other low, we form another low, we monitor that most recent low, and then we break structure on that one, bang. We're good. Break structure to the downside. That was loud. So other than that, as you can see, I got a little bit more energy today because, again, yesterday I just had I had a headache or something. But today we went over break of structure. Hopefully I explained that good enough for you guys. I'm pretty sure I put enough information out there that I wish I knew when I was first starting out in trading. Again, this is the way I trade. If you don't like it, you don't have to watch me. I'm just trying to show you the simplest way of doing it and just how I trade personally. It works for me. I have the proof. Go back, look at my back testing sessions and my trade recaps and all that shit. So again, this is a break of structure. It's pretty simple. Do not enter a trade just based off of a break of structure. We're going to get into more confluences as we get in. But again, this is just the beginning. We're going to keep making these videos every day, every other day. So far, it's been every day. And we're going to keep pushing forward. So again, I forget what number video this is. I think this is number 7, right? I think this is number 7. We're already done 7 videos already. Let's check this real quick. This is video number 7. Holy shit, we're moving along. So this is video number 7. We're going to keep making these videos just to help whoever wants to learn how to trade. If you even never looked at a candlestick chart before, I think these videos will help you out a lot. This is something I wish I had when I was just starting out within those first 4 years where I struggled a lot. So again, I don't know, trying to help as many people as possible. Let's keep making these videos, and I really do appreciate everybody who does pay attention to my social media. Whoever's liked and subscribed and follows me on Instagram and TikTok, I really do appreciate it. Let's keep growing. Let's become the best trader ever. One day, hopefully, we will. I don't know. But let's keep pushing forward. We're going to get better every single day. We're going to help you guys get better every single day. We're going to grow as traders together. Again, I'm on my own journey. Everybody's on their own journey. We all grow at different paces. Let's just help each other out and just keep growing and try and become profitable in trading because it is the best fucking job in the world, and I want to do it the rest of my life, and I'm going to do it the rest of my life. I don't give a shit what anybody says. If I got to scoop dog shit to make money, if I go bankrupt to be able to trade, I will. Even though I already do scoop dog shit because I got 3 dogs. So, yeah. All right. Goodbye.